Thank you very much for the introduction, Tim. I might get you to turn to the next slide, which gives an introduction to our business. Basically, we looked at lending when we launched the business back in 2014, and we saw that traditional lenders can be slow, cumbersome, and often provided quite poor value. So we looked to reinvent lending from the bottom up. Me and my two co-founders, me with more of a financial background, them with both a software and a financial services background, set about building Plenti, previously named Rate Setter. We've built the business very much with technology at our core, so that we can provide customers with a better experience and so that we can scale really efficiently. And I've got some great slides I want to talk through there in that regard. As Tim said, we listed on the ASX last year. We listed in September, and since we listed the business, we've been growing very strongly. Look, our purpose is about bringing our customers, our borrowers, bigger ideas to life, as well as our investors. And our mission is to build Australia's best lender, which sounds grand, but I really do think in each segment that we're already active in, we are doing extremely well and earning a great reputation in terms of being a very good, if not the best lender. Moving to the next slide, we operate in 3 different lending verticals. We started off in personal loans. We've diversified into renewable energy and automotive loans for 2 reasons. One, we really like the credit characteristics in those verticals, but also the scale of the opportunities. These are exceptionally large markets. If we just take the automotive market as an example, around over $30 billion of lending every year. And the dynamic there is that, like the other markets, you've got large incumbents that have been less focused on these markets, have been selling their loan books, Westpac being the most recent example, which is creating a real vacuum for businesses like ours to enter and build scale. I'll show you some very impressive growth on the next few slides, but despite that growth, our penetration in each of the verticals is very low, leaving a very large opportunity for us in the automotive market, around 1% market share in terms of originations. So a long runway for growth given the size of the markets we're in. On to the next slide. You see our growth there. The first 5 or 6 years of our existence was really about making sure we built strong foundations so we could grow very successfully. Once we did 2 things. One, got the right funding in place. We did that in February last year. We started funding out of some warehouse structures. We've now got 2 warehouse funding structures. And you can see the growth that we've experienced, particularly in the last year. In FY21, we have a March year end. We grew originations by 64%. And in the latest quarter, we released a quarterly result earlier this week. You can see that we have now hit $1 billion run rate in terms of loan origination. So exciting growth to be achieving there. On to the next slide. One of the things that we've really focused on as a business is building customer reach. This is the sort of thing that takes time, but builds a lot of value in a business. So we work with over 10,000 loan brokers. We work with over 700 renewable energy firms, be they OEMs like Tesla, or be they energy retailers or people installing solar panels and home batteries. So a large proportion of our loans come through these referral partners. We like that because we tend to earn very good economics when we're not paying marketing dollars, rather we're investing in a B2B relationship. We've also got very strong digital lending capabilities direct to consumers, which represents around 15 to 20% of our originations at any given time. We've also attracted, a universe or an ecosystem of over 500,000 customers, a number which is growing strongly. On to the next slide. I've got a little bit of information here on our 3 verticals, which I'll just touch on quickly. In automotive lending, we've spent a number of years investing in automotive specific technology, distribution, and building the right funding to put us in a place now where we can grow really strongly. Last year, we grew our automotive originations by over 300%, and the latest quarter, even higher growth than that year on year. So that's really reflective of us taking market share in a very large market. But as I touched on earlier, given the size of that automotive market, still some way for us to grow. We're just focused on offering consumer loans at the moment. We have just recently in May launched a an offering for commercial customers as well, which really doubles the size of our addressable market in auto, giving us confidence around growth going forward. Moving on to renewable energy, you'll see some consistent growth there, but it's actually accelerated more recently on the back of us launching a buy now, pay later offering at the start of this year. So that has seen a good uptick in our originations over the last quarter in particular. As I said, we work with over 750 partners. We actually have the government by this Clean Energy Finance Corporation funding some of our loans. We run 2 government programs. So a very exciting and strongly growing part of our business. On to the next slide on personal loans. I think everyone will probably understand the dynamic that the banks are losing market share. Technology-led digital businesses like ours are benefiting from that. I think one of the things that differentiates us as a business is the fact that we do earn very good economics on our personal loans, given the fact that we've been in market for some time. We're very good at attracting the right customers from the right, one of our 33 different digital partners we attract our customers from, and have a very effective funnel so we can derive good or low cost of acquisition. On to the next slide. Obviously, as a lending business growing strongly, you need to make sure you're doing that without compromising credit. You will see the average credit characteristics represented here with the credit score on our portfolio are exceptionally strong. Average credit scores well into the 800s across our portfolio, which contrasts actually much higher than what the big 4 banks would have in their personal loan books, for example. Similarly, our 90 days arrears exceptionally low, below 50 basis points, which we're very proud of. On to the next slide. We've talked a bit about technology, and I guess it's hard to emphasize how important that is. It's really what underlies our growth as a business. We own our own technology. We have 40 staff domestically and offshore that are focused on our product and technology. That is the key differentiator. Maybe an example in that regard is in the automotive finance space. 90% of our loan applications will decision within an hour, which is much faster than our competition. And that's one of the reasons some of our referral partners prefer to use us rather than other lenders. And it's really our technology that allows us to deliver such fast outcomes. The fact when we underwrite a loan, we don't have to ask the customer so much when we're going to so many different third-party sources for information. So we can make it a much more streamlined process for our referral partners and applicants. On to the next slide. Here's some highlights from our year to 31 March, obviously a COVID year, but things certainly moving in the right direction. Revenue over $50 million and our cash NPAT, moving in the right direction quite quickly. And then finally, on the next slide, we talk a bit about our priorities here. I mentioned we've just hit a run rate in terms of loan originations of $1 billion in June. Our target, our financial priority this year is to reach $1 billion loan book by March, which is our financial year end. The next priority is to achieve cash NPAT break even as a business prior to June next year, whilst investing in future growth. And then finally, driving our cost to income ratio from 55% in the last financial year to 35% over the medium term. In the last quarter, we made good progress towards each of these ambitions. So we think it's a very exciting time for our business with the growth we're achieving, the operational leverage inherent in what we do. And one thing we did update investors on in our quarterly results was the fact that we expect to issue our first term transaction, so to sell $300 million of our automotive loans into the term market. So again, increasing the diversity of our funding and reducing our funding costs, which we see as a bit of a short-term catalyst for our business. So that's the summary, Tim. I don't know if you've got questions flowing from that.
Thanks, Daniel. Good timing, spot on timing. What is your source of funding?
So we started with a focus on retail investors. We then introduced a raft of institutional investors, the government, and 8 different banks funding loans. But the majority of our loans now are funded out of 2 warehouse funding facilities we have, backed by one of the big 4 banks and some other mezzanine finance providers, one specific to automotive loans, the other specific to renewable energy and personal loans. And they represent about 80% of our funding. And the next logical step, once you're funding out of those warehouses, is to issue some term transactions where you can further lower your funding costs and reduce the equity that the business needs to provide.
And I mean, you're technology driven. Do you consider the banks competitors, or do you have some other competitors out there?
That's really specific to the verticals we operate in. If we think about the automotive market, we've actually seen a succession of banks depart that market. We saw ANZ depart that market when it sold its book to Macquarie some years ago. We've seen Westpac selling its book now. So the competition is partly banks, but also, there's a number of other lending businesses there. I don't think there's a business quite like ours in terms of, the emphasis on the technology, on innovation, in terms of constantly improving the product offering. And that's one of the reasons that we're really rapidly driving that growth. If we look at the personal loan market, when we started lending, a number of years ago, the banks had about 90% market share, the big four about 80%. That's declined quite substantially to the benefit of businesses like ours. I think when consumers think about getting finance now, they don't think about going straight to their bank for a personal loan, for example, or auto loan. They think to come to a business like ours, they'll look at product reviews, they'll search on Google, they'll go to a loan broker and take some advice. And these are all the places where we're relevant.
And I think you showed a slide there where your clients have a higher credit score than normal. Why is that relative to the banks? Is that part of your process? Is it process driven?
It's partly that. I mean, there's the bank population is a very large population in Australia, and we think that's where you need to be if you want to build real scale. I think in terms of why our credit ratio is a bit, it's partly by the nature of where we're lending. So renewable energy customers tend to be homeowners, tend to have a mortgage, they tend to be very responsible people. Similarly, in automotive finance, the way we've sought to build our distribution has been focused on those very prime customers. Similarly, in our personal loans, I think we've always sought to make sure we have a very strong credit track record. And one of the reasons for that is it comes out in your cost of funds. So, you can continue to attract lower cost of funds if you've got that strong credit performance. And we can use technology very effectively to filter out better who we do want to lend to and who we don't.
And can you talk to a little bit more about the renewable energy vertical? Obviously, automotive, personal loans is a big part of the market, but why pitch yourself in that area of the market?
Well, really, the credit performance is quite exceptional. Our annual loss rate on those sorts of loans is well below 50 basis points. It's a pretty large market with a relatively small number of players in that market. We saw about 30% growth in solar installations last year in Australia. The uptake of batteries is increasing quite quickly. And as most people know, batteries are quite expensive. So it increases the spend for a renewable system quite dramatically when you also couple a solar system with a battery. And that increases the need for finance. So we see a real growth opportunity in that segment, and a real opportunity for us to work with some large corporates and other partners to build scale quite rapidly there.
And given COVID's so topical, it's a standard question, how's that impacted your business? And then can you talk a little bit more about where you see growth moving forward?
Look, it's interesting. In the June quarter last year, we actually had a record quarter in automotive finance and renewable energy. So we saw strong demand through that COVID period, and I think the same can equally. And personal loans, look, we did tighten our credit criteria and so on. So we quite deliberately withdrew our marketing spend and tightened credit there. But actually, in the last quarter, we had a record across all three verticals. And when we look forward, we see opportunities for growth in each of our verticals. Automotive is probably the largest opportunity, just given the size of that market. And similarly, in automotive now, and renewable energy, now we've launched a buy now, pay later offering, and coupling that with our personal loan offering or interest-bearing offering. We've got a fully featured sort of product set for people who are actually selling this equipment to people in their home. So they're probably the two that we would call out as having the largest growth opportunities in front of us.
And can you give us a little bit more colour on your distribution with the referral partners?
Yeah, so we've built quite a lot of technology so that we can integrate with referral partners, be they loan brokers or renewable energy installers, amongst others. It's all about making their job easy, allowing them to grow their business so that they can provide finance easily to their end customers. They'll care about different things, but often it's around making sure you've got a really fair, transparent loan offering that's got competitive rates. But often more important, it's how rapidly can you approve a loan application and service the end customer so that they can go and install the solar panels or sell them, or let the customer go to the dealership and get their car. And often a loan broker, for example, in automotive finance, is actually competing with a dealership that's offering finance. So they want to lock that customer in quite quickly. So the technology aspect and building, those really strong integrations with your partners is unbelievably important. It's obviously quite hard to do that if you're building off legacy systems, and that's where we see ourselves as having a real advantage as a sort of bottom-up technology-led sort of business.